All right, welcome to the Explainer. Today, we're going to talk about a number that's always staring back at you from your trading screen. Equity. I mean, what is it really, and what's it trying to tell you about your money?
Okay, let's kick things off with a little puzzle, one that every single trader runs into. Imagine this. You've just put $1,000 into your trading account. You see that number right there on the screen. But is that what your account is actually worth right this second? Well, you might be surprised to hear that the answer is not always yes.
So to really wrap our heads around this, we've got to start at square one. The absolute simplest case, Before any of the trading chaos begins, this is our baseline. Okay, first things first. Let's get our main term down, equity. Think of it like the live, beating heart of your account's value. It's not some number that just sits there. It's constantly moving, up and down with every single tick of the market. It's giving you the most honest, up-to-the-second snapshot of where you really stand.
So back to that simple state, right? When you're just sitting on your cash, no open trades, nothing happening, well, things are super straightforward. Your equity is just a perfect mirror of your account balance. They're exactly the same thing.
And you can see that playing out right here. You put in $1,000 and boom, both your balance and your equity show $1,000. Everything's in perfect sync. It's kind of like the calm before the storm,
But let's be real, you didn't open a trading account to just sit and watch, right? The second you jump in and place a trade, that's when everything changes. And that's when the true power and personality of equity really shows up.
See, once you've got a position open, its value is going to be all over the place, fluctuating as the market does its thing. This creates what we call floating profits and losses. They're unrealized because you haven't closed the trade yet. But make no mistake, even though they're not locked in, they are very real.
So how do we actually figure out this live value? It all comes down to a super simple but really powerful formula. Ready? Your equity is just your account balance plus or minus all of your floating profits and losses. That's it.
The best way to really get this is to see it in action. So let's do that. We're going to follow a single trade from start to finish and see exactly what it does to our account.
All right, picture this. You've just followed a hot tip. You've put your money on the line, you're glued to the screen, and, man, the market immediately moves against you. Your brand new trade is already showing a loss.
And right away, your equity reacts. Now, even though you haven't closed the trade, so your balance is still that same $1,000, your equity has dropped to $950. Why? To account for that $50 floating loss. It's the market giving you a real-time update on what your account is truly worth.
But hang on. Just when you're starting to sweat a little, the tide turns. The market completely reverses, and your trade swings all the way from a loss into a profit.
Yes! And this is just a perfect example of how dynamic equity is. Your trade is now sitting on a $100 floating profit. Your balance, it's still $1,000, but your equity, it's shot up to $1,100. It's like a live wire, right? It reflects every single twist and turn.
So this whole scenario really highlights the single most important distinction you need to get when you're managing a trading account. Seriously, understanding the difference between balance and equity, it's just not optional, it's non-negotiable.
And this comparison here just lays it all out crystal clear. Your balance, that only changes when you actually close a trade and lock in a profit or loss. But your equity, that's the here and now value, taking into account all your open trades. Put it this way, balance is history, equity is right now.
So here's the key takeaway. Think of your equity as your floating account balance. It's the temporary value of your account. It doesn't become your real account balance until you close out all your trades. So yeah, unlike a tattoo, this number is definitely not permanent.
And this is why it's so important. You could totally have a big number in your balance, but have tiny equity. Let's say your balance is $1,000, but you've got an open trade with a $900 floating loss. Well, your equity is only $100. That, my friends, is the danger zone. Having low equity is what gets you margin called. It's what stops you from opening new trades. Equity is the warning siren.
Okay, so after all of that, what's the moral of the story? Why have we spent all this time just zeroing in on this one number?
It really all boils down to this. Equity is the true health monitor of your account. It's the real-time number that tells you what you actually have to work with. Your balance, that's just a record of what's already happened. When you're talking about managing your risk, equity is the only number that truly matters. It's the number that dictates your margin, how much of a hit you can take, and honestly, your survival as a trader.
And that leads us to a final, pretty sobering thought from the legendary trader Peter Brandt. Look, knowing your true financial position, your equity, that's step one. That's crucial. But understanding what that money actually means to your life, outside of the charts, well, that's the most important question you could ever ask.